This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup, and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Ganesh Padmanabhan, who's a technologist, entrepreneur, early stage investor, and has been very active in the field of artificial intelligence. BeyondMinds has built the first enterprise AI solution that is universally applicable and easily adaptable. They deliver hyper-customized, production-ready AI systems that enable sophisticated companies to overcome the massive failure rate in AI adoption and rapidly implement ROI positive transformations. Ganesh, thank you for joining us.
Hey, thank you for having me, Hal. It's great to be here.
Great. So can you give us a little bit of an update about your background? What did you do before this?
Well, I mean, right before BeyondMinds, I was actually previously the co-founder of a data management company. Prior to that, I was with another AI company founded by the original founders of IBM Watson called Cognitive Scale, headquartered here in Austin, building AI solutions for Global 2000 companies. And prior to that, I had a long career in high tech. Dell, notably, I spent about 11 years there and was the general manager for a young growing business before I left. So, but I can go, my background starts right from, I was an engineer by education, if you will, and spent various, several years of my career in the intersection of hardware, software, but always in tech, cloud, storage, cloud infrastructure, the whole nine yards. And the first 15 years was all in like big companies, big tech. And Dell was the very fulfilling run when I was a general manager for an emerging business, converged solutions business. It turned out to be the youngest billion-dollar business we built. We grew about 10x in 4 years, and that was pretty awesome. And then from that journey, pivoted to go into more early stage companies, and that's how I ended up a long, winding road. Never a straight line. I'm here.
Great. So, what led you to start working that space to begin with?
Well, I always loved building stuff, right? And as a kid, I wanted to be an engineer as a kid. Early in my career was always about building products and offerings and stuff. Later on is about building companies and businesses and so forth. I think I've gravitated always towards things that are new, a little shiny, often unproven, technologies. And I was a first product manager at Dell for our cloud computing project back in the day. I led the creation of the converged infrastructure, the data analytics business units, long before it was commonplace and everybody was talking about it. So my career was filled with a bunch of, iterative, taking new, shiny things, demystifying net new technology, building a product, business, or company out of it. And, with some success, some being successful, some were not. But finding my way into AI was a little bit more evolutionary, right? When I found cloud computing in the mid to late 2000s, I was still at Dell. I remember thinking this democratizes the access to computing. Like everybody can do computers, developers can just go haywire. AWS was coming out and I should be doing something to be part of that market. Then started noticing how the explosion of data, if you will, right, due to that democratization was creating new opportunities. I mean, and in the early days, all we were telling people were like, hey, all you need to do is just store all that data. So I was part of the big run on big data and Hadoop and Cloudera and stuff like that. But with analytics and machine learning is when we truly started realizing the vision of technology powering humankind, right? You now put really vast computing power that's very cheap due to cloud computing, all the data that generated because everybody now have access to computing. And then, all the democratization of these, algorithms and research coming to bear. And then this became one of the, the golden eras of technology in the last, I would say, 5 to 7 years, where you can now use data and all that computing power to really personalize experiences, predicting the future, avoiding risk, automating our lives to do things. So, I mean, it was about a decade ago that I really got captivated into data and ML and AI, and I quickly jumped onto it. And I've been fairly active in this space. I would say recently, we were I was a part of an AI company, and we were doing projects for really large brands and Fortune 50 companies. And everywhere the common theme was data was the Achilles heel for AI. And so we founded that company to focus on the data readiness side of AI. But then, I got into this space with AI and data and everything. It's been an evolutionary journey. And I love being here because it's at the intersection of technology and humanity, right? Taking a very powerful technology to solve the most human of problems. And I get excited with powerful ideas and amazing people. And being in the space allows me to be, to pick and choose what I want to be with, right? So yeah.
Well, great. Well, what's your advice for people investing in this space? What do you tell them to do before they write that check?
A lot. I would say, so AI in general is so broad and wide and holds, honestly, I'm a huge believer. I'm a huge tech optimist. There's like PwC did a report a couple of years ago. I think they talked about this $13 trillion impact to GDP across the world with automation and AI. The reality is we are still fairly early in the cycle. The good news is the market has left the hype phase and is now heading towards more like a productive phase, right? So everything was AI and every URL was .ai a few years ago. Now it's a little bit more tempered in how people are approaching it. So opportunities to invest are still plenty, and there's a lot of these things. Now, not specific to the market, generally, my advice is always like, I like to use a surfer analogy, right? To have a pretty good surfing experience, you need the surfer, the surfboard, and the waves, right? So the current. And you can equate that to startups to say you need the entrepreneur who's a surfer, the surfboard, which is the product or the offering, and then the waves, which is your market. Now, the reality is you can have an amazing surfer, an amazing surfboard, but if you don't have real good waves, you don't have the market, you're going to be pretty effed up. It's not going to have a good outcome, right? Whereas you can probably have an okay surfboard, but a great entrepreneur, a great surfer, and amazing waves, then you can make history, right? So that's the way I approach this investing in the sector. So that's the general thing, and we can talk very specifically about the market itself and how the sector itself is evolving.
Well, let's do. How do you see the industry evolving from here coming out of COVID?
So first off, as I said, like we're still very early in the cycle, and COVID has actually shown us that technology is the ultimate equalizer, right? Making progress accessible for everybody. We made so much progress in the last 100 years than we did in the past 200,000 years before of humankind. We made probably double that progress or even more in the last 10 years than we did in the last 100 years. We probably made, and I think it was Satya Nadella who said during COVID, we probably did 2 years worth of digital transformation across industries in a span of 2 months early last year. But the industry is evolving pretty rapidly. I mean, AI, this sector in specifically, right? Generally in the space, look for tangibles on what companies are solving for. What's the business problem? What happens if you don't solve it? I'm a technologist. I always have to stop myself from thinking technology first. So why do you need this technology to solve that problem? Whereas, instead of actually looking at here's a piece of technology, what problems can I solve with it, right? So it's very important to know that. But generally on the sector, here's a few thoughts on evolution of the sector. Machine learning or AI as in broad, it's a wide spectrum of things. Everything from automated, fully automated experiences like autonomous driving and self-driving cars and software that you build for that and products you build for that, to just plain automation, good old automation called robotic process automation, which is scanning documents, taking stuff from there and putting into a digital format and pushing it through. Everything is AI, right? So, but general things to think about, machine learning algorithms, which everybody says, so it's all about the algorithm. Algorithms are largely commoditized and are freely available in open source. So no company can have a moat purely just based on algorithms. The moats could be the data, the network, the customers sets that they actually build, and just the knowledge that you build out of by doing this machine learning algorithms. The AI market winners so far has largely been the hardware and the cloud vendors, right? Because the lowest common denominator is the computational infrastructure needed. And AI is very hungry in that department. Horizontal AI platforms, right? Things that can be adapted to multiple sectors, multiple industries and stuff. that help teams build and deploy machine learning systems and intelligent applications, those are really, really hard to build. And it takes very deep and long cycles of R&D, a long history of delivering these platforms. So cloud computing companies are mostly best positioned to do that compared to like an early stage startup coming into the space, right? Niche vertical specific companies that focus on a specific problem, a particular domain, they have access to a particular set of data. That is where you should actually, those are higher chances of success. You can solve a problem using machine learning for that particular narrow space in the market. That's been a good mantra for success so far. But the issue here is you run out of time. Is the market big enough and all that kind of stuff? Value, and then to expand out, like but being in the space for about a decade now, right? Value creation with AI has been very slow in the market. Companies have invested in AI, are investing in AI everywhere, but they were promised so much and they're getting so much out of it today that anybody who tries to accelerate that value realization will be extremely valuable, right? Things like, how do I not just help you build ML models, but really help you with the deployment, the monitoring, the operational challenges of doing this? My current company, BeyondMinds, we focus on this space specifically saying, one of the big problems in AI is customization. Every problem has unique solutions because it depends on that problem specific data, the domain context, the needs of that the business needs of that problem to be solved. So there is a high degree of customization, which is why most companies cannot scale their AI efforts. We help with that by providing a very modular platform to go do that. I think humanizing AI through audit, right? So the EU yesterday or so came up with, there was a leak of a document how EU is going to just is going to govern AI pretty strongly. There's a lot of fine and stuff. I think it's going to, the immediate reaction to me is those fines are going to be accepted by these big companies who will write it off in their income statement and earmark that just like the banks do today. And it'll penalize all the smaller innovative companies who are trying to actually get grounded in this thing. They just created a huge mode for those big guys so the small guys don't come and eat them up. But humanizing AI through audit, through governance, keeping AI safe, making organizations trust AI, all that is going to be a huge part of the market. I think that's a huge area of opportunity. As I said, the industry is still very nascent. The pioneers may be here, but the settlers haven't yet come. And there's a lot of innovation left to do.
Well, great. Well, so what is the growth rate of the sector today and how many companies are engaged in it? Just how big is it and how fast is it growing?
Oh, it's big. I think, I looked up some numbers. I think 40 billion in revenue for AI specific companies. The market is 40 billion in 2019, 300 billion by 2026. And growing at about a 40% CAGR. So that's just ridiculously large market. I mean, partially is also because the definitions are so broad, right? What you'll need in a market like AI where value compounds is the growth rate actually increases as you solve more fundamental platform level problems, because that allows innovators to build on top of that and grow, on top of it much, and it grows much faster and, the access to technology gets cheaper. So it's actually an interesting concept. Like AI is a market that you will probably see the compounding effect of the growth rate as you grow in, right? It's a huge market, but usual markets, they grow really fast initially and then kind of plateau. Well, AI, you're going to see the other side of it. It's going to grow pretty well. And then it's going to go further because a lot of the foundational innovations will actually lead create a playground for other innovators to build on top of it, right? How many companies are engaged in it? I don't know, but AI, ML is such a huge part of every company's future, right? There's this joke that we used to have a few years ago. Somebody did this analysis. Number of earning calls where the term AI or artificial intelligence was actually talked about by the NASDAQ listed companies, and the number was ridiculously high. Over 50% of the companies in their earnings calls were talking about their initiatives in AI, right? That hype has come down a little bit, but large and small, international, domestic, AI is an opportunity, and everyone is embracing it. I would actually say that AI is an opportunity for companies to not just dramatically accelerate against their competition, but it's almost suicide not to think of AI as a way to transform your business. If you haven't started on the journey, you risk being too late to the party. So there's so much, compounding value. The earlier you start, you'll actually accelerate that much faster.
So what are the challenges in starting a business in the AI sector? What do people come up against that they have to overcome?
You know, it's interesting, right? Because there's some similarities with the web, the internet-based companies and stuff in the past, but there's also some broad differences. Depending on what problems you're solving, you have to understand that ML requires data and algorithms, right? So when I say data, so machine learning, I'm sure your leaders understand, your listeners understand this. A machine learning algorithm is an algorithm that learns from data on what input will lead to what output, right? Very simple. But what that means is actually creates a really interesting challenge that it requires subject matter expertise on a domain to understand and interpret the data. That becomes a critical element. So if your team is actually pitching you something and there's a startup where none of the founders have any experience in that particular domain or understand the data very well enough, that's usually a red flag, right? It's a long game, and be sure to approach it as a marathon than a sprint. There's no quick wins, there's no easy wins here. This is a hard, long game, right? The other thing is customer trust in this market is becoming very hard. There had been a lot of AI washing, as I mentioned, over the past 5 years, and that's making really hard for customers to know what's real, what's not, right? So focusing on that and how do you build trust in your offering early on as a founding team is going to be very, very important. That's going to be key, in fact, right? Getting early wins, using that to really build trust in your offering and your team to solve the real problems. Knowing that building an AI product probably requires a different set of skills and approaches than building a regular SaaS software product is also one place most founders get it wrong. The need for customization, like I mentioned earlier, that BeyondMinds solves for, it slows down this value realization for clients. The need for data, the maintaining the product in production, making sure the algorithms don't degrade when you have stupid data being thrown at it and stuff like that. So just understanding how do you approach building an AI system, and it's not just building another SaaS product or rule-based software engine and so forth. I think the last thing I would say is business models for AI companies. And, like I said, you can look at the S1s for C3 AI, Palantir. They're not really fully SaaS-based. There's always a huge services element to it, right? So what that means is also, valuations differ, and how you actually, how do you get to the kind of valuation that you want to get to differs, because traditionally, you look at SaaS, higher valuation, services, lower valuation, and that won't work, right? I mean, it's because AI companies have to really think about it as a hybrid model. And I'd recommend, honestly, as founders, you should embrace this, focus on value creation for clients or obsessing over SaaS ARR metrics. But also, like as investors, just knowingly going into that with a mindset saying, this is going to be a little different than like a SaaS business, if you will. So those are some of the things that I would say, are challenging, but also the big opportunities in the sector, right? Something different.
Yeah, absolutely. It seems like you have to build, substantial data sets and have unique data analysis, and then you can have to actually build the algorithms, and that's a substantial cost up front. How do you see most people covering that process?
So, I mean, first off, you don't have to, there's a cost up front, but it's less about, I would say, it's not so much the amount of data that actually determines this, right? It's more about understanding the context and having the right data set that actually captures that context and using it to train it, right? Now, most good startups that I know actually identify the problem, understand what makes the problem tick, and how do you have a hypothesis of solving that problem, and then get that early customers to either give them the data or they have access to that data through some other means, and then go solve it, go really solve it. And then that process, you'll learn a lot more, because you know that it's not just data, it's understanding the context of the data. It's the subject matter expertise with respect to the data. It's the fact that your algorithms, as I said, are available free, open source. 80-90% of all algorithms in the world are free and open source, right? But how do you edit and customize that for the particular domain of the problem? That's the hard part. And it's usually what I've seen is working in partnership with your early customers. Unlike a regular SaaS product, you will build something and throw it over the fence and say, let's play this, get some early customers. It's going to be harder to do that in AI in general.
Well, great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, I mean, I think we covered a lot, but I try to pack everything into the short form format that you had. I would say, the future is super bright, right? I'm a huge technology optimist, as I mentioned. I think there are two themes that are emerging very, very clearly in the space. One is, I call it radical automation, which is your AI and machine learning. How do you automate more and more mundane human tasks so you allow human ingenuity to actually come up versus just operating through normal mundane stuff, right? Automate all that, just free up the human mind to actually do bigger, greater things. Well, the second trend, and we see that in how the crypto world woke up this last 2 years again, is radical decentralization, right? And I put it that way from a perspective of there is mistrust of centralized organizations. Started with governments a few years ago, 5 years ago, 8 years ago. It started with how much people trust Wall Street or any of the centralized institutions. So what that is also doing, even to an extent that what COVID did in terms of creating the remote workforce, right? All of that is just decentralizing the concept of a central thing that runs everything, right? It's either the people that are everywhere, it's the systems that's everywhere, it's centralized. It's no longer centralized decision-making system, it's more decentralized systems. So I would say those two trends are going to, rule it all and define a lot of changes that we're going to see over the next 2 decades or more.
That's great. So how best for listeners to get back in touch with you?
Well, I'm fairly active on Twitter and LinkedIn, but Twitter is probably the best way to do it. DM me, follow me, or shoot me a question there. Love to engage, love to actually engage with other investors for sure. And I'm fairly active in this space too.
Well, great. I want to thank you for joining us today. We'll include those in the show notes and hope to have you back for a follow-up soon.
Sounds good to me, Hal. Thank you so much for having me here.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.